Hi there, it's Bill with Smart Trades. It's November 11th, just about 1 p.m. Pacific time going into the close. And I'd like to look at the stock market, in particular the S&P, and also the euro and gold today. Right off the bat, here's the a chart that I posted yesterday showing a possible top in the market and looking for, at that time, a possible bounce back to around the 1218 area. Indeed, it did turn out that way. It's not clear to me yet if indeed we have a top, and I'll get into that with these other charts. Here's a little more detailed look, and here we have our 5 waves up out of a triangle, possibly. To be honest, this is a very short 5th wave, which, as it was occurring, made me think that probably that wasn't the peak. That said, at this point we've come down a little too far, farther than the ideal anyway, for a 4th wave. So there is a possibility the top is in. What I would prefer, if that is the case, is perhaps one more rally back up to the 1218, 1220 area, and it should fail there. That's a previous 4th wave support and also resistance from yesterday's intraday peak. So if we're going to be putting in a top, if the top is in, I think the next rally should not go through 1220 or so. It could go a little higher, but ideally I don't think it should. Here's a little bit more of a pulled back version. And the possibility that we've got a 4th wave. Again, to my way of thinking, originally I was looking for a new high, but the depth of this decline here is much deeper than typically would be the case. One other more bullish scenario is that we're actually, this whole pattern is a 1 and that this pullback perhaps is a 2. And if we go flying through 1230 or so, that could come into play. But for now, I'm looking for that 1218, 1220 area. If it rolls over there, I certainly would get bearish. If it gets through there, the next target is my old target, which is around 1230 or so. Now, as always, we'll take it one step at a time. But again, if this is a 4th wave, it's rather deep. A little cause for concern in terms of making a new high. So, as always, we'll take it one step at a time. One thing I also noted in my report yesterday was the triangle, and I recalculated that a bit, tweaked it a bit, and it is possible that you could count that apex coming in actually late tomorrow. That's a classic Elliott wave targeting tool for a breakout of a triangle. So, if we were to jump through 1220 and get up to around 1230 and put 5 waves in off of the current lows, and keel over from around 1230 either late on Friday or early in the day Monday, that also would be a potentially bearish scenario. Also, the advanced decline line has put in lower peaks and lower lows. It's certainly set up for a possible selling opportunity. Here's the Dow. The Dow has a crisper 5 waves down, 4th wave support, 4th wave resistance would come in up around perhaps the 1350 area. As always, we'll take it one step at a time, but again, perhaps a retest of this swing area here, somewhat below the 11,400 area basis the Dow. Also on the Dow, let's look at the monthly chart. With the new highs recently, taking out the April highs, this is a count that's become popular. The possibility still that we've got a wave 1 down and that we're carving out a big ABC wave 2. Now, one problem I have with that is the most likely scenario, as we've talked about many times before, for an ABC rally is for C to equal A. Well, it doesn't have to do that, but that's the most likely scenario. And indeed, if we get an equal ABC rally, it's actually going to take out the 2007 peak, which would negate this count of wave 1 down, ABC wave 2 back up. So something to think about, something to watch as it develops. I prefer, the scenario that I've put out there for some time, saying that indeed this rally is an A, but that we're still in the process of correcting that leg up, and we still need a C wave down. Also, in my scenario, I don't count the decline to the 2009 low as a wave 1, rather as a portion of a larger correction, and a wave C probably. But we'll have to go back and take a look at that in the years to come. But for now, suffice to say, I think we're getting near a peak, and that ideally, if we are, we're going to take out the July lows before the next decline is done. But as always, one step at a time. There's no conclusive evidence that a peak is in yet. That said, there is evidence that a top is in the euro. We're getting an impulsive style decline, and you can count it as 5 waves down. We would like to see an ABC or corrective style bounce back up that fails to make a new high, and indeed that the old high, here's the longer term picture. We have our wave 3, our wave 4, and our 5th wave peak. That peak is 142.76. So if indeed we've topped, obviously we should not take out that peak, and that would negate this Elliott wave count of a wave 1 down and a possible wave 2 back up, which at this point is showing no signs of having started yet. And finally, gold possibly also peaked. The recent high 1424.40. Again, 1424.40 is the peak from the 9th. You have a very impulsive looking decline on good volume. You have a corrective looking rally back up on somewhat diminishing volume. Most of the volume has been on the downside, and indeed a possible secondary small 1-2. So again, we do not want to see this this top from a few days ago breached, but right now it's possible we have a 1-2 style setup in gold, and if that's the case, it should go down almost immediately here, and it should go down fairly sharply. I would give it a few days to develop. It's possible that we may go up and take out this little peak and develop a more complex wave 2. But again, the 1424.40 area should not be breached. That would negate this count and force us to reevaluate our analysis. Anyway, that's it for now. Hope you're having a great day and a great week ahead. Thanks for watching.